Yeah, here we are. I see more people joining in. Thank you very much. I'll begin with a quick introduction about myself. I used to be a retail trader, a computer programmer. I founded Forex Crunch back in 2008. That was my site. Sold it last year. I joined FX Street in 2018. My focus is on fundamental analysis, my topic today, and I'm leading FX Street's premium content team. And just before we reach the topic of the day, of course, the European Central Bank decision, I want to let everybody know that we have a special offer today on our premium section, 50% off for annual subscriptions. That's basically 6 free months. You pay for 6, you get 6 additional months. What do we have in our premium section for those that are not subscribers yet and are not familiar? Well, maybe the strongest part of our premium offering is the exclusive traders community, where you have access to my colleague Tomas and myself. We get lots of positive feedback. You get access to us. We accompany you. We also provide daily trading alerts, signals analysis, strategies, and economic data and events. You can leverage our actionable content, and users that are with us for some time are very happy. They say that they get what they need to know when they need to know it. Excellent insights, really inspiring me, and more such positive feedback. We have accumulated over, together, over 20 years of experience to back us up. We know markets all the way. Yeah, and you also get, well, everything I talked about, actionable content, following our trade plans, and getting all the premium analysis. And this is the special offer we have for today. So you can just use this link here, which I've just shared on the chat, to go to our landing page and sign up for premium. Okay, so that's my quick pitch, and it's expiring quite shortly. So today we'll talk about the ECB, talk about inflation on the one hand, and the Russian choke on the other hand. We'll talk about last-minute positioning ahead of the event. When trading a news event, we always need to know how markets are positioned. We'll talk about the 3 factors to watch around the event, and then we'll conclude, and then also talk about speech by Fed Chair Jerome Powell, who has the chance to speak at the exact same time when ECB President Christine Lagarde is taking the stage, but well, talk about that later. So, why is the ECB going to raise rates? Because there's inflation, prices are rising. The ECB only has one needle in its compass, that's inflation. It needs to bring inflation down, okay? It needs to have inflation at 2%, and inflation is currently at 9.1%. That's very high, okay? That's headline inflation. It already made the liftoff back in July, the previous meeting. They raised rates by 50 basis points. That means the main rate is 0.5. It was at 0, and the deposit rate, the funds that when commercial banks park money with the ECB, they used to be punished for that. There was a negative rate. Now it's not negative anymore, and they promised more to come. So regarding inflation, the ECB can control things. The ECB has good reasons to raise rates. Europe is still doing well. Core inflation, excluding prices of energy and food, not that we don't consume these things, but things that are more dependent on employment, wages, and other stuff, that's also high. That's at 4.3%. It reflects strong internal demand. Okay, good news for Europe. And the unemployment rate is at 6.6. I know some of you are from the United States, and it's much higher. In the US, unemployment rate is 3.7. But in terms of in European standards, that's very low, okay? On the other hand, energy prices are out of control. This is something the ECB can't control. The most recent big development came on Friday when Gazprom, the Russian state-controlled company, decided to cut off flows from Nord Stream. It has a significant impact on Germany. These flows of gas to Europe are already high. This is a schematic map of pipelines entering Europe from the east, from various places in Russia, and also from other ex-Soviet republics such as Azerbaijan. And most of it is passing either through Ukraine, and the gas there is still flowing, or from Russia. So if it passes through Ukraine and Russia and Ukraine are in conflict, this is a very precarious state. Now, the European Union wants to go towards green energy, renewables. That's all great for the planet, but that'll take time. It is also working on LNG, liquefied natural gas, but there's just not enough capacity, for example, in the United States to export gas, to liquefy gas, and send it to Europe, and not enough in Europe to absorb it, not enough pipelines within Europe as well. Okay, so in the short term, energy prices will stay high, and it causes two troubles. First of all, it can already fix inflation by itself, because if we here in Europe have less money in our pockets, we spend so much money on energy, we have less money for everything else, so inflation could eventually come down. So why would the ECB have to add to that? Okay, and on the one hand. On the other hand, well, another trouble is not only that it would bring inflation down on its own, but also that it hurts German industry, especially the chemical industry like BASF, but also other industries that are heavily dependent on Russian gas. They will have to shut down, and if this locomotive of the European economy derails, we'll have lots of trouble here in Europe. We'll have an economic crisis, a recession that'll bring well, inflation down as well. It's hard to see any kind of response, European response, and European leaders are scrambling in recent days to take some action, but it's hard to see any response that doesn't include rationing, doesn't include less consumption of energy, which means less economic activity and eventually lower prices. Shutdown of some German industries would be a big hit to the entire continent. It will bring lower inflation. So what does the ECB do? At the moment, it has a small window to raise rates. The idea is to prevent an inflationary mindset from entering consumers' heads, okay? So that consumers will not expect prices to rise, will not rush to buy stuff before prices rise and actually turn into a self-fulfilling prophecy, and that they will not demand higher wages. Many workers here are unionized, contrary to the US, so we have collective bargaining agreements, and that means higher wages, and that means higher inflation. So the ECB wants to prevent all this, but without choking the economy too much, because, as I said, energy prices are already choking the economy. So it's a very hard balance, and it has limited time to act. They will probably act this time. And what will they do? So in the run-up to the event, they sent a lot of hawkish hints, hinting at 75 basis point hike, more than 50 basis point that they talked about in July. It began in Jackson Hole. There also Fed Chair Jerome Powell talked about raising rates aggressively, and that helped stabilize the euro. Now, if you look here at the euro-dollar chart, you see everything falling, but it could have been worse. It's worse with the pound, worse with other assets. So since Jackson Hole, we've seen a chorus of hawks. I don't know how hawks sound in a chorus, but that's the mental picture you have to have. And and it's important to remember that the ECB, the European Central Bank, is competing with other central banks. So here we have Powell at Jackson Hole also talking about raising rates. And the Fed wants Spain. The Fed doesn't care. Well, they have a more privileged position. The US economy is doing well. But this guy here with the two dogs actually look cute, not that fierce. But Neil Kashkari of the Minnesota Fed, he was actually very happy to see stock markets fall. He's already seeing some pain, at least in stock markets. That's what the Fed wants to see. The ECB doesn't want to see that much pain because there's already enough. But it's important to remember that contrary to a few years ago when central banks were competing to lower their exchange rates, now the opposite is happening. Okay, so finally, Germans are vindicated, not only the World Cup here in 2014 in football, but finally inflation is rising. They were talking about inflation for 10 years. Never happened until it did happen, and expectations are now high. Hawks forced a 50 basis point rate hike last time. That was when the ECB had been talking about 25 basis points, and now they've been pushing a 75 basis point hike, and what's called restrictive rates. That means that interest rates are higher than the inflation rate. This is not the current state of affairs, but this is how things are going. I see here a comment that you cannot hear anything. I hope others can hear me loud and clear. Please let me know if you have any issues or it's only a local issue with one listener. Anyway, I'll continue at the moment until I hear anything else or I read another comment. So back to the presentation. The ECB has been calling for higher rates, at least many hawks there. Yeah, I can hear you. Okay, I hope your problem, Paul, will be resolved shortly. Anyway, I'll continue. I guess for all of you it works. So the ECB is talking about higher interest rates than the inflation rate, and it might get there. What's important for traders is to know what markets are pricing in. And markets are pricing in 75 basis points, okay? Anything else would be a disappointment. Okay, so that's something to take into account. Okay, so now let's move to trading the event, what we should watch out for. So first is first, what's priced in? I said 75 basis points. That means the basic rate, the main lending rate from 0.5% to 1.25%, and the deposit rate from 0 to 0.75. That's the base case scenario, okay? And in this case, it would put the focus on the other factors that we'll shortly be talking about, okay? But let's talk about what happens if at 12:15 GMT, tomorrow the ECB talks about Thursday, the ECB doesn't raise rates by 75 basis points, but only by 50 basis points, which was the outcome that had been projected until a very short time ago. In this case, no matter what else happens, the euro dollar would plunge, the euro would suffer. It would probably be seen as a response to what's going on with energy prices, that the ECB is afraid of a big downturn, means fewer rate hikes down the road or none, and that would be euro dollar negative. Now, there's also an extreme scenario, highly unlikely, that the ECB takes a very bold step, decides it'll fight inflation, whatever the cost, and raise rates by 100 basis points. Forget about it. Well, I'm mentioning it because, don't forget about it, I'm mentioning it because there is a chance, but it's very unlikely, and that would, of course, boost the euro, whatever happens, okay? Higher chance of a 50 basis points and much higher chance of a 75 basis point rate hike, okay? The second thing to watch out for, assuming a 75 basis point hike, is what comes next. Markets are always forward-looking, and it's always important to remember that changes in expectations are that's what moves markets, not what the ECB does. So if they raise rates by 75 basis points, that's a big step. That's very hawkish. That should support the euro, right? But we already know that, so it's neutral now. What's important is what comes next. October, the next meeting, and December, the last meeting of the year. So markets are pricing a 50 basis point rate hike in October, and also the same in December. The ECB in its statement will likely not comment on that. Probably just say that they're responsible for bringing prices to stability and things like that. But ECB President Christine Lagarde, here in the picture, she'll surely be asked about it. Probably one of the first questions, what's next? What's next, okay? Now, what does she say? If she says that something like, well, we'll just act according to what's going on and we'll see what happens, we're data dependent, then it'll be a bit of a dovish sign that the ECB is unsure, that there's uncertainty. It could hurt the euro just a bit. But there's also a chance of the Lagarde saying that, well, we're determined to raise rates and we'll raise rates by 75 basis points once again. And in this case, the euro will rise because it'll be a promise to act aggressively. It'll be above what markets are expected. That's the most important thing to note. If she says we'll probably have to slow down because of the energy shock, that'll be negative for the euro. If she doesn't say anything, what we can glean is from the dot plot. Sorry, there's no dot plot. I call it the dot plot. But the ECB publishes forecasts every 3 months. Happening now, it'll be growth forecast and inflation forecast. If the ECB forecasts a recession, that's bad for the euro, of course. I mean, it's easy to understand that, but it also means that if there's a recession, the ECB's window to raise rates is narrowing even more, and that's bad for the euro, okay? Inflation forecasts can also be significant, but it can show a sign of if inflation is high, it means that ECB will raise rates quickly. If inflation is low, it'll cut rates or not cut, but raise them a bit more slowly. Okay, and these forecasts will likely trigger choppy price action because these are headlines that come out on news wires, and the algorithms respond to numbers better than they respond to nuances like facial expressions from Lagarde or what her tone says. Okay, so I think we'll see lots of choppy price action, but more important thing is if she says recession, if her tone is gloomy or not. And the third factor is really the tone, and especially what the ECB has to say about Russia, not that directly about Putin, but how the ECB sees the energy crunch. Again, if they say we'll go with the flow, well, see how things happen. It'll be a message of uncertainty, a bit negative for the euro, but not that terrible. If they'll say, yeah, no preset path, the same, we don't know. But if they say, we'll just fulfill our mandate for low inflation, keeping inflation under control, we'll raise interest rates no matter what, do whatever it takes, then it'll be euro positive because it will mean higher interest rates. I think it'll be also good because, I mean, for the euro, but for the ECB as well, because it'll push the euro up. Higher exchange rate means lower import costs, and that'll be good to lower inflation. On the other hand, it'll choke the economy. But yeah, that's a scenario. Again, Germans are now in control. Germans are more inflation averse than everybody else. Okay, but if the ECB says, well, there's already lots of damage done, we see a recession, winter is coming with cold showers, cold homes, and significant damage to the German industry because they're very dependent on gas, that'll be fewer rate hikes, and it'll be negative for the euro. Okay, so to conclude the points I've made so far, about the ECB, and to talk about something else, the ECB, first is first, rate decision, 75 basis points, that's priced in. That'll mean other factors have more impact. But if it's a 50 basis point rate hike, that'll send the euro down, and I don't see it recovering. The unlikely case of a 100 basis point rate hike, that'll send the euro up without any, looking back, putting only dust behind it. Now, the more important factors, because we assume it's going to be a 75 basis point rate hike, I'm talking the royal we, talking about markets, the message for the future for October, it'll be probably released in the press conference. Again, a 50 basis point rate hike is priced for October. The same, another repeat of that is priced in for December, another 1% rate hike until the end of the year. But if there's no pledge for that, it's negative. If there is a pledge for 75 basis points, once again, it'll be positive for the euro. And perhaps the biggest factor of uncertainty is what's going on with Russia. We've just heard from Putin that gas flows to Europe will increase if Europe eases some of the sanctions to Russia. It just goes to show that all those technical issues were not real, okay, to use mild words. Every turbine issue can be resolved once sanctions are removed or once Europe stops supporting Ukraine. Anyway, speaking about if the ECB says it's just data dependent, we don't know. It'll be neutral, maybe a bit negative for the euro. If they're determined on raising rates, it'll be positive for the euro. And while fear of winter, of significant damage to the economy, that'll be negative for the common currency. And we have a bonus. So let's look at the timeline because this is important. Jerome Powell is back. The Federal Reserve is going to have its rate decision on September 21st, and from this Saturday, September 10th, the Fed stops talking to the press. It has its blackout period. So this is the last opportunity for the most important central banker in the world, Jerome Powell, to send his last message. He'll be speaking at 1:10 GMT. Okay, that's just 25 minutes after ECB President Christine Lagarde takes the stage. That'll be just in the middle of the press conference. This is the timetable. So 12:15 ECB decision, 12:45 the press conference, usually lasts for an hour or so, and then at 1:10 GMT, Fed Chair Jerome Powell speaks. What will he say? That nothing has changed since Jackson Hole, very determined to raise rates, to fight inflation, do whatever it takes, or whatever words he wants to use, inflict pain if necessary, and that's positive for the US dollar. The US dollar advanced a lot, but last time I looked, there's only a 70% chance, I say only because it's not 100%, of the Fed raising rates by 75 basis points in September. Well, that's in 2 weeks from today. So that'll keep the US dollar bid. Now, reporters there are, of course, they get the news, they follow Twitter, they have other sources. They will listen to the news just like all of us, and they will hear what Powell has to say. His prepared remarks might be released in advance, just when he begins talking, and they might relay his comments to Christine Lagarde, and he might influence. Remember that the Federal Reserve is the #1 central bank. His mere presence, I mean, not physical, but having a speech at the same time, holding a speech, would cause Lagarde to become more hawkish, okay? And she might try to convince markets that the ECB is determined to fight inflation. And the big question is always, will she be able to convince markets? Not all of her public appearances have been so great, so that'll mean only more volatility. It could be euro positive if she's very, very determined, but she'll need to make big promises, and she'll need to be very convincing and speak in short sentences. Usually tends to read from long statements, and that isn't that convincing for markets. Okay, so that's what I've prepared for you. We have around 6, even 7 minutes for questions. If you may have, you're welcome to ask me anything about what I've been talking about, of course, the ECB, or anything else about markets. Dollar yen is going crazy. Bitcoin fell out of range. Really, anything you want to ask. And once again, I'll remind you that for those of you not in the premium service, we have 20 years of accumulated experience, or even more, and you can take advantage of our actionable content, learn from us, tap into our great Discord community, lots of good vibes over there, and just have access to my colleague Tomas Sayes and myself, and hopefully more people joining the team later on. And today we have a 50% discount for yearly subscriptions just for today. So take advantage of this. Let me share the link once again. Do my job also a bit as marketing while we await your questions. Your questions are more than welcome in the chat box. So far, I can only see a thank you note and one person with issues about hearing the presentation. Yeah, no questions so far. And of course, if you sign up today, you can join our special coverage where you can access our questions in our Discord community. So one question here, is the same scenario for Euro Yen? Yes, tomorrow around the ECB decision, the main, it's going to be the Euro moving everything else. I mean, Euro against the dollar, Euro against Yen. I would say the only exception would be Euro Pound. Both the Eurozone and the UK are suffering from the exact same issue, the energy crisis. It has an impact on other places, but mostly here in the old continent, and that includes also that island there, the UK. So I would say that the pound, if there's good news for the euro, it could drag the pound higher against the yen or other currencies. But if it's bad news for the euro, I think the pound would also suffer against other currencies. But regarding the yen, unless there's something extraordinary happening related to the yen at the same time, I think euro dollar and euro yen will trade in tandem around the event. Good news for the euro means higher euro yen. and bad news for the euro means weaker euro yen. Okay, the yen has been quite vulnerable lately. The dollar yen has been moving in response to higher US yields, higher expectations for the Fed. It has been having some kind of a ripple effect of a weaker yen also against other currencies. But I think that around the trading session, around the ECB decision, euro yen will move exactly like euro dollar with very small nuances. Okay, I hope that answers the question. I see even more people joining at the last moment. You're welcome to ask questions. We still have more time. In case if you're already a premium user, you can follow what we're doing in our Discord channel, Trading Studio. And outside your premium, you're welcome to follow me at Forex Crunch. Yes, I'm still with that Twitter handle. And of course, all the coverage on FX Street. You're most welcome. And all of you, you're most welcome to ask more questions. We have just a bit more time left. I'll just mention that a recording of this session, if you've just joined in the last moment, will be available, so you can listen and watch once again. Yeah, you're all welcome. What is your view on Euro Swiss franc? Yeah, so Swiss franc serves as a regional safe haven. Okay, when Russia invaded Ukraine, then the Swiss franc gained ground against the euro. It's a safe haven in that sense. It's not a safe haven like the dollar. If we talk about safe havens, it's a dollar #1, while the yen lost its status as a safe haven. It's a weak safe haven, mostly regional. Things go wrong in Asia, and Swiss franc, also a regional safe haven. I think that the Swiss National Bank is impacted by the European Central Bank. If the ECB will act aggressively to raise rates, it'll sort of egg the SNB, the Swiss National Bank, to move rates a bit higher as well. If they move a bit more slowly, the SNB might move a bit more slowly. But one thing is clear: the SNB, Swiss National Bank, is not the Bank of Japan. The Swiss National Bank already raised rates. It's ready to raise rates once again. They're very averse to inflation. So I would say that most of the movement in Euro Swiss will be related to the ECB, like with Euro Yen, but we might have a bit of a moderating effect because investors would expect the ECB, the Swiss National Bank, to follow the footsteps of the ECB to some extent. So that would serve as a moderating effect. So Euro Swiss would not rise as much as Euro dollar, or not fall as much as Euro dollar. Hope that answers the question. Yeah, so you're most welcome. So just once again, I'll mention that if you're not a premium user just yet, welcome to join us. We have a special offer just for today, 50% off for annual subscriptions. I think it's worth it. I'm biased, of course. You can use the link I've shared beforehand and join, and you can follow our coverage of the ECB and be able to ask us questions. I think it's one of our greatest points in the premium service, being able to tap into our knowledge. Okay, so I see no further questions, and we've run out of time. So I want to thank everybody once again for coming here today. Yeah, okay, one last question. View on the Canadian dollar, that'll be last question. Oh, Aussie against the Canadian dollar. Well, both are commodity currencies. I mean, Canadian dollar has been suffering with the oil prices, the Australian dollar with weak Chinese data, weak imports and exports. I see both of them as balanced. I can look later at the chart and see if technically one currency has an advantage over the other. If you're in the premium section, I'll answer that over there. But yeah, but basically they're both commodity currencies, both suffering. Each one suffering against the dollar and against each other. I see them as balanced. Okay, so that answers a bit of your question. That's it for today for the ECB preview. Wish everybody success, lots of pips, and to trade happily. Thanks for joining here, and you're welcome to take advantage of our offer, and I hope to see you soon. So that's it for today. Thank you, and bye-bye.